Now another one, we have a cleaning May 14. How much is that? That is 160 naira, 165 naira, 165 naira rather. So moving to net information, May 15, petrol, and that is under motor expenses. That is 90. That is 90 naira. The next information, May 17, we have postage, and that is you bring it under the postage column, and that is 25 naira. Now let's move to the next information. We have May 18, which is we have a motor expenses. That is 215. Now let's trace it to the motor expenses. This is 215. Now next information, we have May 20. That is cleaning. We also have another cleaning here. We trace it down here. That is 105. The next information, we have May 22. We have May 22, and that is traveling. That is traveling. Let's treat it to the traveling column. That is 45 naira. And after that, we have May 24. May 24. That is stationery. Stationery. That is so you take it to stationery columns. How much is that? That is 95 naira. Now we have May 30. May 30, we have another cleaning. Cleaning, that is 65 naira. The last but not the least, May 31st, Kayode. So we'll represent it to this is another ledger. Kayode will be under the ledger account because it is a personal account. So we trace it to the ledger account, and that is 75 naira. So having done this, we are going to calculate the columns, the total of the columns, and the total of the rows. So let's calculate the total from the columns here and the total from the row here. So that is 90 under cleaning. Let's start from the cleaning. Under cleaning, we have 90 plus 165 plus 105 plus 65. That is 425. So that is that on here. Under motor expenses, you have 40 plus 110 plus 90 plus 215. That is we have 485. Then under postage, we have 90 plus 25 plus 65 plus 25. That is 205. Likewise, we have traveling, which is 60 plus 85 plus 45. That one is 190. And under ledger, we have only one, which is 75. Then we're going to stationery. Let's add it, 45 plus 95. That is 140. Having done that, then we calculate the rows also. Under petrol, we have 70. Under here, we have to find the total of each item. Under traveling, we have 60 here. Under here, we have 25. And likewise, here we have 110. Here we have 85. Here we have 90. Here we have 45. Here we have 65, we have 165, we have 90, 25, 215, 105, we have 45, we have 95, 65, and 75 as well. So calculating all this, the total is 1,520. So this is the expenses that was covered by the cashier is 1,520. So if you add this total also, you will still arrive at this figure. Now here we go. After this, then you will now remit it, because this is the amount that was received by the cashier. You will bring it down here. This is 1,520. Then you write cash book, and then you write May 31st, because you are going to give account at the end of the month, because petty cash book is run on a monthly basis. So that is a cash. You put cash here. So what are you going to do is that you bring this receipt down here, which is because at the end of the day you remit the two accounts. This one that is covered and this one that is expensive. This is the receipt, and this is the amount that is covered at the end of the year. So that is the way they operate petty cash book in an organization. So you bring this amount down here, which is a balance CD. So you put it, you trace it under here, which is 1,600. You add it, that is 3,120. Then you add the other side, which is 3,120. So having done this, then because this is the amount, the systems at which they operate petty cash book is quite different from other ones. So this is the amount they operate, this is the amount they cover, but this is the amount that the cashier receives at the end of the day. So bring this one down here, because you remit it in the following month, that this is the amount that has been spent. So that is June. So that will be June balance brought down. You brought this 16 down here. So that is how they prepare petty cash book. And you can, according to the information they said, post it to their correspondent ledger. So I know I told you the other time that haven't done with your cash book, you can go ahead and draw a ledger and put them into the ledger. In doing that, and that's why you have to be very careful as a financial accounting student. In order to apply your double entry principles, you have to be very careful, so that having done all the accounts you are given, you have to draw your ledger. As smart ledger is a permanent account. Now let me just give you, out of this account, you see that the total of the cleaning, this is total of expenses, this is total of postage, this is total of the traveling ledger, and one for them. Let us quickly draw the ledger, their ledger. So because by not drawing the ledger, then you are not applying double entry principles, you are only applying single entry. So now let me start from the total. This is the total of the cleaning, which is 425. Then you just write cleaning account. You draw a ledger. This is the ledger, this credit side and this debit side. You know it is in the debit side. Then anything that has to do with cleaning is an expense. So cleaning has to be debited. You just write petty cash book. You write May 31st. You write May 31st because you draw ledger at the end of the month. So that is you write petty cash, and how much is it? That is 425. This is how you prepare your ledger. Then motor expenses. These motor expenses as well is also because all these things, they are expenses. So you prepare it May 31st, petty cash, and the total of it is 485. That is that. Then that of postage. That of postage is also May 31st 30, because it is on the credit card book that you gotten the information 205. Then traveling expenses, May 31st, petty cash, that one total is 190. Then the ledger account, which is Kayode account. So you also write May 31st, you write a petty cash, which is that is 75 naira. Then stationery, May 31st, petty cash, that is 140. So that is that. On these are you do it. So depend on the kind of information. If you are not asked to draw the ledger in the exam, you just draw this one. But if you are told to prepare, post those entries, these expenses into their ledger, then you can go ahead.